Are your kitchen and bathroom way overdue for a remodel? Well, I got the guy for you. Call John Sellers at First Response Contracting, 484-256-7136. Both residential and commercial services, and he's licensed and insured. Call him at 484-256-7136. First Response Contracting. Hello, this is Brad Weisman. You're listening to Real Estate and You, where each week, or mostly each week, I get to interview some people, talk to some people, have a little chat about what's going on in the real estate world, and there's so much to talk about. We have a market that's just kicking butt, and we're having a good time while we're doing the kicking of the butt. But with me today, I have Justin Perella from the mortgage company. He was with me a couple weeks ago, and we're having a good time, right, Justin?
Always,
right?
Always with me and you, Brad.
Exactly. If you're not spilling your coffee on the table, it'd be great.
Yeah, but I'm digging the new microphone. I mean, this is like almost professional,
bro. You got real headset now.
Yeah.
You got a real headset, yeah.
I went away from the fabulous Cinderella headset.
Yes. So let's dive right into it. It's been a couple weeks since we talked, and I wanted to talk about where things are going, where things have been. And, obviously COVID is still in the world right now. Yeah. But what is going on in the mortgage world right now? Like, tell me what you see.
Well, for the most part, we're seeing a lot of volume. What you're experiencing on the buy-sell side, well, pretty much the buyer side, which it seems like, imagine that double for us because we have refis.
Jeez, that's crazy.
So refi rates are hurting us. I mean, I'll never say I'm too busy.
Right.
So what it's done is we have to obviously prioritize. We have to always prioritize our purchase business before our refinances. So from a lending standpoint, it's just for me setting the expectations up front to buyers and also people refinancing.
Right.
Where at the beginning we were trying to push everybody through the same garden hose, and it's not working.
Yeah. Let me just ask you about refis real quick. I just thought of a question, man.
Sure.
Not to interrupt you. You can keep going then. But with the refis, I mean, obviously it's not under the same crunch in time.
Correct.
I mean, you don't have somebody packing up. You don't have somebody that is dependent upon you to get into the house at a certain time. They're already in their house. So can you be a little bit more relaxed on that?
Absolutely.
When it's a refi?
We have to. Because, if you start with, and I'm making this number up, 10 processors and 5 underwriters, and you have 50 loans and you can handle that, that's great. But if you double that to 100, now you start having problems. So somebody has to get bumped.
Right. Exactly. So it's going to be the refi.
Correct. Yeah, always going to be the refi, which is good. And if you find a lender that says no, then it could be problematic.
Yeah, absolutely.
So we've identified that and we've hired.
Yeah, and that's something I talked to Mike Bauer, who is one of your managers, and he said you guys have been hiring like crazy because to keep up with the momentum, to keep up with what's going on. And I personally don't see this getting any better anytime soon as far as it goes with how busy we are. I think it slowed up a little bit because of school, kids going back to school. People are a little nervous about how is it going to work going back to school with either online or going in halftime or whatever it is. So that's good that you guys did that because I know some other lenders in the area are basically just saying, hey,
we'll deal with what we have.
We deal with what we have, and you're going to take longer to settle. So you did tell me before we started, though, that 30-day closings are pretty much are tough.
Unless you're cash, unless you don't need me.
Exactly.
But first of all, think about all the jobs that are inundated now with orders. So it's not even just us, it's our appraisers who, they're not making it anymore. Yeah. So just even getting in touch with them and getting them to complete it where it might have taken 14 days, I'm making it. Now it's, 20. So you really have to order your appraisals up front, follow up, make sure they were accepted, then make sure the guy didn't break his leg, which is what happened.
I got that email. And he's not kidding when he talks about a guy breaking his leg. Did he break his leg at the actual appraisal?
I haven't found that out, but I was close to saying because our client responded.
It's a good excuse, though. It's a really good excuse.
I said, poor guy. I said, last year I worked with 2 broken legs and a broken arm. I said, ask Brad. He's the one who hit me with this car.
That's pretty funny.
But I didn't send it because I didn't know
if they could take the joke. Exactly. Right. Yeah, exactly.
I know you and I can.
Yeah, absolutely. So 30 days is what we're looking at. So if somebody, 45 days.
Correct.
Let me correct you there. All of a sudden, you'll be getting all these calls for 30 days.
Just in conclusion.
Sorry. So 45 days is what you're really telling people right now. And and you know what? I know that people try to push it and try to do the 30 days, but you know what? There's so much less stress if you just give it a little bit more time.
Not worth it.
Also, settle on a Wednesday or a Thursday.
Great point.
Right? Why does it always have to be a Friday? And it doesn't have to be a Friday, right?
It does not. And that is a great point. I don't know why it's not been brought up to, and maybe it is in your training, but
I've been doing that.
Okay,
I'm trying to do settlements on Wednesdays and Thursdays now.
Yeah.
Because I just feel it's so much less stress. You're going to get better service from everybody. Because the closing department the bank, everybody is stressed out on a Friday.
Correct.
So I think
that's a great point.
Yeah, I think that's something we got to keep working on. So getting back to, I wanted to bring up, we had a little situation, you and I, with a transaction where it was a domino effect. And I think a lot of people forget that when we're doing these real estate transactions, we're not only concerned about one transaction. There's many transactions that have to go along the way in order to get, because the $60,000 house has to settle to get to the 150.
Correct.
The 150 has to settle in order to get to the 250, and on and up the whole thing. Sometimes we have 4 or 5 of those in a row.
Families.
Yeah, exactly. And these are people that are packing and putting their stuff in trucks. We had a situation not too long ago. It was my listing where it literally, and it wasn't you, it was the lender, it was another lender. And they called 24 hours before settlement and said, this is not going to work because the buyer is being denied the mortgage. Yeah. How in the world does that happen today?
Well, it shouldn't, because, it gets back to communication, and like we got it to work, but it was an inconvenience to everybody because it took us another week to adjust. But as I told you, if that lender, which it's not a fun call to make.
No, it's not. And just so I want to make it clear, it was not your company.
Yeah, no.
You had the people on the other domino, on the one domino, and we just sat there and went, oh my gosh. And it was something so we felt was kind of something should have been brought up before.
Correct.
But this is something, and from that, what I've learned is that we have to be very careful these days. Number one is who you pick as your lender is very important. Make sure they know what they're doing. Make sure they're in this business. Make sure they're local. And that's another thing, right? I
agree. Yeah.
Because that lender that did that was not local.
And we don't know where to find him, so we can't go
exactly. Can't go strangle him. But the other thing is that the thing that I see with that situation was that it just wasn't researched enough.
Yeah.
Some of these lenders give out pre-approvals way too easy. Are you guys doing a little more digging in the beginning?
Yeah, but let me just go back real quick to that, because again, if you're a lender or a realtor, you never want to hear bad news, but it's always better to hear that bad news or earlier, because then I could have switched gears and we might not have inconvenienced people at all. We might have been able to switch gears, which we did, and borrowed from a 401 or from a CD or even from a relative. So the time is crucial to letting everybody know. And even if it's not an issue, still bring it up as a potential, because you can still plan around.
Yeah.
But
and I think, and you guys, we talk about the word pivot a lot in KW, and a lot of businesses do too. Yeah. You guys pivoted perfectly as a lender, and I appreciate you doing that. But that just shouldn't have happened, But I think also the other thing with that situation was there's a lot of things that are changing, or a lot of things that are coming up now. I'm seeing with COVID, as far as people. The lenders are getting a little weary about somebody being laid off, or somebody, is it going to be permanent? Are they coming back? The furloughs. Yeah. And that's something that we have to be careful of too. We want to make sure up front, does that person have a solid job?
Yeah. Agents have to, like we talked about this before, agents almost have to do a little bit of our job as well. Just understanding who is approvable in this world.
Yeah.
So it makes your job a little bit harder, but uncovering those answers early will help us and help you set expectations. Yeah.
So I have on my list here, of course, the question that everybody asks, where are the interest rates?
Yeah. No, they're good. Purchase side is great. So what the FHA and the other Fannie and Freddie loans have increased a little bit on the refi, and I think that's the investors trying to slow the roll a little bit, but they're still great. I mean, I'm quoting under 3 all day for purchases.
And what about credit scores? What kind of credit score do I need to have to get the best rate?
740 plus.
Okay. After that, what's the lowest credit score right now? Like if I have a 640, am I okay?
You're okay for most programs at 640. I'd say 580 used to be the 640. I keep saying that, but 580 is still approvable.
So 640 is the new 580?
Yeah. Well, it's so weird because there's so many things that go into an approval, but a strong, because believe it or not, there's a strong 580 and there's
a weak 580.
So a strong 580 is approvable all day. What I mean by that is less collections. You're paying on time. So I can still do 580s, but I'm coaching them to hopefully get some credit help and increase it a little bit so their rate's not. Because
what's the rate of 580?
Good. That's where I was just going. So a 580, the one major thing with a 580 on a purchase is that you may not have a 0 point rate available.
Right.
So
wow.
if I have a 580,
so you're paying something.
Correct. So if you've got people, and that's again where it comes into play for you, because if you're saying how much can this guy afford,
right?
Well, if he comes up with a 580 and his rate is, let's say, and they're still good rates, so let's say it's 3%, but the only way he gets that 3% is with a point. But wait, I only have this amount of cash to put that. So
it's a lot of juggling going on. So the moral of the story is the higher your credit, the better. The better deal you're going to get. The easier it's going to be for you to qualify them, and we're going to be able to go look for a house. And I think when it gets into points, just because we don't talk about them a lot anymore, just to explain to anybody listening what that is so on a $200,000 loan, if there's 1 point, that's $2,000 out of their pocket.
The point is always one, and here's a misconception too. It doesn't always have to. See, we don't deal in full points, so I may be able to say to a client, "Hey, you're at a 3% at no points, but with a quarter point, I can get you 2.875."
Gotcha.
So it doesn't always have to be a full point.
It could be pieces of a point.
Correct.
Yeah, little pieces of a point.
Pieces of a point.
Well, that's pretty cool. So, is there anything else? I think we're going to wrap this up. Believe it or not, that was almost 11. It's over 11 minutes already. It goes so quick. I just want to keep people on the pulse of the mortgage industry because I think it's really important. There are things that change. So we're going to keep bringing you back here from time to time to basically let everybody know where the mortgage industry is going. And I think we need to do that because it's important.
Yeah.
So I want to thank you for coming in today.
Thanks,
from Justin from the Mortgage Company. It's an easy name to remember, too.
Yes, it is.
From the Mortgage Company. And we'll be back next week with some more people going over different things. Thank you for listening. Are your kitchen and bathroom remodels a little overdue? Well, now's your chance to call First Response Contracting. John Sellers will take care of you. 484-256-7136. They do residential and commercial, and they're licensed and insured. Give them a call at 484-256-7136.